When it comes to companies that need to raise money in the secondary market, I know a lot of you guys are very against ATM offerings and you want to see more companies doing rights offerings direct to you. But rights offerings often have problems unique to a rights offering. And so here on the channel, we've been watching a live experiment going on right in front of us with Genius Group, ticker symbol GNS, which announced a rights offering about a month ago. And that rights offering was scheduled to conclude on Friday, February 14th, and the company could rake in all of that cash from its very supportive investor base, right? Well, it didn't really work out that way. Unfortunately, they ran into one of the roadblocks that I often try and tell you guys about, a problem that happens with rights offerings. They canceled their rights offering because there was not enough participation from investors and they were not going to raise anywhere near the amount of money that they had initially hoped for. On top of that, the share price was absolutely tanking. So in this video, we're going to walk through this 8K very briefly, but more importantly, you should know what GNS is proposing next for dilution. Let's go. Let's get right into it. I've done a couple videos on this over the last several weeks, letting you guys know what was up so that you could follow along with me. And I want to hammer home the point that a rights offering is still dilution. I think a lot of people think rights offering is not dilution. Yes, it is absolutely dilution, but it is sold directly to shareholders instead of at the market to everybody in the market. And one problem that happens when your shareholders don't go in and exercise those rights and buy up those rights, buy up those shares, companies can't raise money and they end up canceling the rights offering. That is unfortunately exactly what happened here, and another reason why a lot of companies don't do rights offerings. Much easier to do an ATM, put the shares out on the open market and get them sold. You know for sure you're going to sell all of your shares in an ATM. Companies have no such guarantee in a rights offering that they're going to sell all those shares, which is why you see most of them doing a standard ATM. Even if you don't like it, you need to understand that this risk exists, and that's why a lot of companies, most companies, do not do rights offerings. If you are an investor in Genius Group, first of all, God bless you and Godspeed. I don't know what you see in the company. Look at this cash position here on Dilution Tracker. Look at the operating cash flow, just getting worse every time they report. But I digress. Let's get back on topic here. If you got rights from the company and you haven't sold them to someone else already, those rights will now expire without any value. And if you exercise the rights, if you sent the subscription agent money to buy shares, that money is going to be returned to you without interest. That ends our live experiment and our little lesson on rights offerings and why companies might not do them and what risks you should be aware of if you're investing in a company that is doing a rights offering. Number one, it's dilution. Number two, there's no guarantee that there will be participation from investors, and the company might cancel the rights offering, especially if the price tanks way below the rights offering price. Why would the price tank? Because a rights offering is dilution, just like it tanks when companies do an ATM. Dilution usually drives the price down. Let's move on and talk about the rest of this 8K because I want you to notice what they left out of the top headline. It says, Genius Group calls EGM, Extraordinary General Meeting, to approve share buyback. Sounds bullish, right? And cancel the rights offering. And yes, it does say right below that they are calling for a meeting for shareholders to authorize the board to carry out a share buyback of up to 20% of the issued share capital of the company. And the share price responded. People saw that headline and like, oh, there's no more dilution from a rights offering and they're going to buy back shares. Pump it up. The price went up. But did you read further? Because there is troubled waters ahead, I am afraid. The fact remains that the company is burning cash like there is no tomorrow. And ostensibly, they want to buy some Bitcoin in case Bitcoin goes up. That could be a saving factor for the company if Bitcoin goes up. they still need to raise money. The company is not likely to survive with a increasing cash burn problem like what we're seeing here on the operating cash flow. The company is announcing their intention to have a upcoming shareholders meeting. I don't think we have a date on it yet, but we'll find out soon enough. And in that meeting, if you are a shareholder, you're going to be able to vote on 3 different things, 2 of which they didn't talk about in that top headline. Shareholders are going to have the ability to vote on giving the board the approval to, at their discretion, buy back up to 20% of the company's common stock. Remember, when you give them that approval, that does not mean that they have to do it. It is at their discretion on their timing, and there's no guarantee that they will even buy back shares. And then you might ask yourself, if they have operating cash flow so bad like you showed us, Tony, where are they going to get the money to buy back shares? Well, I'm glad you asked that, because that is these other 2 bullet points here, which were not in that top headline about canceling the rights offering and buying back shares. They have 2 other things. You had to read all the way down to the bottom to find out. They want shareholders' approval to permit the issuance of a new class of preferred shares with dividends payable, the additional terms of which will be determined in due course. When the vote happens, you'll find out probably. The second item is they want shareholders' approval for the company's constitution to be amended to permit the issuance of a new class of ordinary shares. So in addition to the existing Class A common stock, you will now have an additional Class B common stock that will carry 10 votes per share, with the additional terms of which will be determined in due course. What we have here is 2 new ways for the company to raise money at the market, selling preferred and a Class B common stock to raise money, but that will also be dilution to shareholders. And maybe if the company decides to, they might use some of that money raised to buy back up to 20% of the company's common stock. But now you have preferred, and now you have Class B common stock, and all of that is going to affect the income statement. All of that is going to be dilution on your earnings per share. This is still dilution. We're playing a shell game here. Instead of raising money and diluting shareholders with a rights offering, they are going about it a different way. And, I'm not faulting them for that. They got to raise money. Look at the operating cash flow. They got to raise money, or this company is likely headed into the toilet. And so if you are a shareholder, you can make a decision about the future of the company when you decide to vote on these 3 items. Now, I don't want to be too rough. I know I said go into the toilet. I don't want to be too rough on Genius Group, especially if you love the company. They do have a current Bitcoin Treasury that they've been building up. And on February 3rd, when Bitcoin was trading at $95,500, that Bitcoin Treasury, 440 Bitcoin, was worth $42 million. So they do have some assets, but they do have very high cash burn as well. So CEO Roger Hamilton, we need to see you deliver on that plan where you said there is going to be a profitable 2025 from company operations. And if you can pull that off, maybe you can turn this thing around. But if you're going to have profitable operations, why are you issuing preferred shares and Class B common stock with 10 votes per share? What is the urgency to dilute shareholders even more? That's going to wrap up this video covering what we know so far about the 8K that was released on the 12th and the upcoming EGM meeting. When some more details drop about that meeting, maybe I'll do a video again on Genius Group. In the meantime, if you have any questions or comments, please feel free to drop them down below. Let me know what is on your mind. Let me know what you think about this plan from Genius Group, these 3 items on the upcoming ballot. I'm Tony Denaro. Thank you for watching, and I will see you on the next video.